Let's talk about how to make sure you get a tax deduction for the interest you pay on your SBLOC. I'm Sharon Winsmith, a tax attorney, active investor, and your go-to resource for proven investment and tax planning strategies. And in this video, I'm going to give you a quick intro to how tax deductions work when you're using the SBLOC strategy. If you are someone who's serious about doing SBLOCs, I highly recommend you take my Buy, Borrow, Die course first. That goes into great detail about how Buy, Borrow, Die works, how the SBLOC strategy works, and how to make sure you get a tax deduction and report it properly on your tax return. This is not something you can just rely on your CPA for. Yes, you will have to work with your CPA to get this reported on your tax return, but you need to understand when this deduction applies, when it's available to you, and where and how it should be reported. I've seen a lot of misleading and just inaccurate stuff written about how SBLOC interest tax deductions work, even from very reputable sources. So it's important that you understand and are getting the maximum benefit of that tax deduction if it's available for you. So in case you don't know what an SBLOC is, just a quick refresher, this is where you borrow against your portfolio of stocks. I'll link below to my video where I give an intro into SBLOC so that you can understand the SBLOC strategy in more detail. So how does the tax deduction work for your SBLOC interest? The first rule is that what matters is how I use the borrowed money. So I don't care about the asset I'm borrowing against. With an SBLOC, you're borrowing against your stock portfolio to do something else with that money. You do not care about the stocks in this case. You care about how you're using that cash that you borrowed. The second rule is that you're only going to get a tax deduction if you use that money for investment or business purposes. So if I borrow against my stocks to pay personal expenses like my rent or for clothes or my car, that is not going to give rise to a tax deduction. But if I use it for business or investment purposes, then I should generally get a tax deduction. This third rule is that you need to look at how you're using the borrowed money for determining what type of deduction you get and where that should be reported on your return. So if you're borrowing against your stocks to buy a new business or to fund an existing business that you operate, then that is a business tax deduction. If this is an operating business that you own and manage directly, you're going to report that interest on the business's tax return. If instead you're borrowing against your stocks to invest in something like real estate or real estate rental properties, just any real estate that you use for investment purposes, that is going to be a tax deduction on the rental properties return. So that's usually going to be Schedule E. If you're borrowing against your stocks to invest in some other investment that is not a business you manage and operate, or real estate rental investments, then you are going to report that as investment interest expense. So that might be a case where you're borrowing against stocks to invest in something like crypto, private equity, venture capital, anything like that that's not an operating business that you manage, or real estate. That is going to be investment interest expense, and those rules get a little bit more complicated. So let's just touch quickly on how the investment interest expense rules work. As I mentioned, there are a lot of nuances to the investment interest expense rules. This is a situation where you are going to have to work with your CPA to navigate these rules and to make sure it is reported accurately on your tax return. But don't just rely on your CPA to proactively bring this to you. They may not even understand that you're using the SBLOC strategy or that you're using Buy, Borrow, Die. So you need to understand what you're doing with the strategy, what you're trying to accomplish, and how it should be reported on your tax return. There is a special form you're going to have to file if you're claiming the investment interest expense, and this is an itemized deduction. So there's just one limitation with the investment interest expense rules I want to bring to your attention. That is that you can only deduct investment interest expense to the extent you have investment income. So that might not sound like a problem in practice, but it sometimes is, because in this case, investment income does not include income that is subject to the more preferential capital gains rate. So that is long-term capital gains and qualified dividends. So if a lot of your investment income is qualified dividends or long-term capital gains, you may have a limitation because those are not included in investment income. And any excess amount of interest expense you have above your investment income, you can carry that forward to future tax years and claim that in the future. However, there is a workaround that you can use usually to alleviate any issue you have or limitation on your ability to deduct the full amount of the interest. You are allowed to make an election to include things like qualified dividend income or long-term capital gains into investment income. and that will create more of a cushion or more capacity to deduct the full amount of interest expense in the current year. So I'm not going to dive into this in detail. This does get a little bit more complicated. If you are using this strategy and have investment interest expense, I highly recommend you take my Buy, Borrow, Die course. I have an entire module that covers just how these tax deductions work and help walk you through this investment interest expense limitation and make sure that you don't have an issue. In most cases, you're almost always going to want to make that election and you're not going to have a limitation on your investment interest expense. But this is an area where I see, a lot of misleading and just inaccurate information written about how these rules work, even from very, very reputable sources. So be careful here, take my course, make sure you understand how the rules work, and get this reported properly in your tax return to get the best benefit of the deduction. One other note I want to bring to your attention about this investment interest expense deduction is that you do not get a deduction for any amount of interest on an SBLOC if you are using that money to invest in something that is tax exempt. So if you borrow against your stock portfolio to invest in something like munis, you're not going to get a tax deduction because that investment gives rise to tax exempt income. However, hopefully that's not how you're using this strategy, because investments in things like munis generally don't make sense. One thing I want to make sure you understand too is that you still get the deduction even if you're not paying the interest on your SBLOC. So I know with SBLOCs, a lot of people like to, instead of paying the interest currently, let it get added to the outstanding SBLOC balance over time. You're still going to get the tax deduction in that case, so make sure you do actually claim that on your tax return, even if you're not making current payments. So this was just a quick intro into how tax deductions work for your SBLOC interest. What I hope you understand is how to think about doing your SBLOC in a way you do get a tax deduction and how to maximize and make sure you're claiming that deduction properly. Also, what's important is always think about the SBLOC interest rate from an after-tax standpoint. Whatever rate you're quoted from the bank might actually be lower than that when you factor in the tax deduction that you may or may not get. So if you want to dive into this concept in more detail, and if you are thinking about using SBLOCs, I highly recommend you take my Buy, Borrow, Die course where I cover SBLOCs and the interest deductions for that in great detail so that you can understand and get going with the strategy today. So hopefully you found this video helpful. If you did, please like the video and subscribe to the channel.